Hello traders, welcome back to Simply Forex. I'm here with Pete, as you can probably see. I'll introduce him shortly, and we're going to talk to Pete about his trading journey, and also get him to look at some charts, guys, because he's a bit of a whiz when it comes to the analysis challenge. So yeah, that's what we're going to do in today's vid, guys. If you enjoy the vid, always come join us, subscribe to the channel and hit that like button as you go. So hello, Pete. How are you?
Hello, Tom. I'm very well, thank you. What a privilege to be talking to the master himself.
Thank you, Pete. I will pay you later for that. Yeah, so welcome, Pete. And, like I said, I said to you earlier, we thought we'd get you on because I don't know if any of you guys do the analysis challenge, but it's getting a bit of a following. And Pete, after 13 weeks, is top of the analysis challenge leaderboard. And the analysis challenge, guys, is basically I give you a currency pair at the start of the week to analyze, and then you need to predict Friday's closing price. And Pete, you are a bit of a whiz at this. What's the secret?
Well, I think there's probably a whole heap of luck involved as well. I'm not quite sure how much skill there is, but yeah, I'm certainly getting there.
Yeah.
So yeah, it's going my way. Put it that way. So yeah,
you are
happy.
Consistently lucky. So I say it's more than luck. There's a bit of skill there as well. And also, Pete, so we'll talk to you about the analysis challenge and get you to analyze this week's currency pair. But then I also wanted to ask you a few questions about yourself and your trading journey. So, yeah, I mean, well, first of all, I guess, how and why did you get into trading then, Pete?
Well, I think probably the reason that the analysis challenge is going quite well for me is partly to do with the reason why I got into trading in the first place. And that is down to looking at the longer term charts. What I was tending to do was looking for good entries, looking for value for my rather boringly, my pension portfolio. Okay. So that's how I actually started getting into technical analysis, which was a few years ago. But I wanted to essentially make better investment decisions. And I felt that technical analysis was one way for me to make some better investment choices. So I was looking at sort of weekly charts, monthly charts, even 4-monthly charts. So looking at those long-term investment prices gave me opportunities it was more of a buy the dip strategy, really, which does tie quite nicely into my trading strategy now. So it's the same thing really, but just on much longer time frames.
Okay. And was that Forex, or was you looking at stocks at this point, or was it a combination of different ETFs? Oh, okay.
ETFs and stocks mainly. Okay. Yeah. So not Forex at all really, but I find that with Forex, and certainly the trading and the day trading and the shorter term timeframes, Forex is the best way to go because of the spreads.
Yeah.
So yeah, trading ETFs and trading stocks for me doesn't work so well with the broker and the spreads. So yeah, it's Forex for the day trading. And longer term stuff is more ETFs.
Yeah, that's what I found when I started. I moved from stocks, longer term investments into Forex because the volume in the market, the spread, you can trade pretty much 24/7. It doesn't matter where you are in the world, well, apart from weekends. It lends itself to day trading. Yeah, I couldn't agree more. And how long have you been trading now then, Pete? So from when you first dipped your toe in till now?
I'm probably going back a few years, probably about 4 years, but that's the longer term stuff. But the short term, I think more like the trading side, I've only really just sort of started to get going with that in the last few months.
Okay.
I was sort of I had a demo account trading in the background for a couple of years, but not really making any progress with that at all. Didn't really feel like I was getting anywhere. So just a few months ago, I decided to take some time out of work to concentrate on the trading, because it's so difficult to put your mind into trading when you've got a full-time job. And you're trying to find the headspace to sit quietly, look at the charts, concentrate on what you're doing. after you've just been at work all day, you're tired. I've got two young sons as well, so obviously they keep me busy. So fortunately, I am self-employed, so I just managed to take some time out of work and then concentrate on the charts, and that's what I've just been doing for the past few months. Literally 4 to 6 hours a day, just in front of the machine, looking at the charts and doing my analysis and doing educational stuff, following your content, catching up with all of that kind of educational stuff. So really, really kind of giving it my best shot, really. And so far so good. It's working out quite well.
All right. Well, we'll talk about your results and your strategy a bit more later on. And there's no substitute for screen time. When you first start trading, you just have to get used to the way the market moves, the structure of the market, the flow, and understanding the story of different pairs. And to start with, your screen time is massive if you're learning trading. It was for me anyway. And how have you found that transition, sort of, doing, less of your normal full-time day job and focusing on trading? Have you come across any difficulties or things you have surprised you or you weren't aware of?
Yeah, with the full-time job, obviously going out to work every day, that takes me out of the house. Obviously, I'm meeting colleagues that I'm working with. There's obviously more of a social side, but with the trading, I'm at home. I'm just in my home office here, so this is my space, is my workspace. So obviously, I haven't got that interaction with other people like I would normally have at work. And also from a fitness point of view, I used to cycle to work, and it wasn't very far. It was only 3 miles, but 3 miles there and 3 miles back every day. That obviously would help to keep my fitness levels up. So now while I'm working at home, what I have to do is force myself to get out, go for a walk, or even I've started doing some jogging. So, getting myself out the house and doing something that's a bit more active, because it's so easy to just sort of sit and get totally sort of swamped in with the charts. And then before you know, it's sort of 5 o'clock and it's a bit too late to start getting out the house then. So from a fitness point of view, I've noticed that it's more something that I've got to take control of, and more of a social. You just don't get to meet other people so much. So
no, I couldn't agree more, and that's good advice, Pete. Really, when there's a lot of solitude to trading. It's sort of you and the charts, and it's very important for you to break away from that and get whatever it is. Walk, go play badminton with your mate, bit of football, whatever it is. Yeah, it's so important. I'm a avid gym goer, and that it's just so important for me. Also, my mental well-being, and also being ready to trade.
Definitely, yeah. So I actually find that when I do go out and get some exercise, go for a run or a jog or a walk or something like that, I actually find that my trading improves. And I think it's probably down to the fact that, like you say, you've moved away from the charts, you've got some headspace, and then when you come back, you can just sort of see things in a slightly different light, rather than just sitting there for hours on end, desperately trying to find those setups which aren't there. So getting away from the charts and doing something else is actually makes you a better trader, I think.
I couldn't agree more. If you stare at the screens too much, you'll see things that aren't there. You'll be like, oh, you want a setup, and you'll start, you're a trader, you want to, it's a real contradiction. You want to trade. If you do any normal 9 to 5, you want to do things. You need to be active for your, your business to be successful, whatever. Whereas trading's the opposite. It's almost like you do less, and you get better results. It's quite contradictory like that. Yeah.
I think it's quite important to have other things that you can go off and do and do, get distracted really from the charts. Because like you say, you can be sitting there and you can be forcing a trade because you've basically got nothing else to do. And you feel like this is what I need to be doing. This is my job. I need to trade. So you're sitting there thinking that you need to find those setups and get on with that trading. But sometimes sitting on your hands and doing nothing is absolutely the best thing to do. So if you can find something else to keep yourself distracted in the meantime, then that's the best option.
I couldn't agree more as well. Sitting on your hands is a skill that you must master. And everyone thinks, oh, that'd be easy. I'll just wait for a setup. it's not easy. Yeah, I
No.
tell you now.
But on the plus side, comparing trading or retail trading at home with a regular day job, obviously the benefits to trading more than outweigh the negatives.
Yeah.
Obviously, having freedom to just work whenever you want to work.
Yeah.
Obviously, for me, family life, having the freedom to go and pick the kids up from school or take them to their clubs.
Yeah.
Having that kind of the freedom to live life as you need to live it, rather than just living by the 9 to 5 day job.
Yes.
It's great.
And it's difficult to break that concept. It's been drilled into you from a young age. Like, you work 9 to 5. I come from a working class family, and they're like, you get a job, you work 9 to 5 all your life. It's difficult to break that mindset.
Totally. And I get that with people even now, people, friends and family, they know that I'm giving this my best shot. But even now, people say, how's the sabbatical going? When are you going to go back to work? And it's like, I will be going back at some point, but this trading is something I want to nail, and I'd rather try and fail than not try at all. So for now, this is what I'm kind of focusing on doing this. And it's like, if other people probably go, whatever, he's eventually he'll get bored of that and he's going to have to go back to work. But I want to see this through really, and just find out once and for all whether it's something that I can do. And then it's just another string to my bow then. So I can go back to work, but if I'm not working, then I know that I can fall back on the trading and make some money doing that instead.
Yeah, exactly. Even if it's a full-time thing or even a passive income while you're working, I couldn't agree more. All right, cool. And your trading style, your trading strategy, how would you describe that, Pete?
I would say it's a price action strategy. So I'm predominantly looking at the price action, but it's a trend following strategy. So I'm looking for the trend. It's the daily trend that I'm mainly focusing on, and I'm essentially looking for value on the daily chart to make my entry. Whether that's a long or a short. So it's a continuation of trend. That's my strategy.
Okay, so trend, retrace, get in at value, continue with trend.
Yes. Okay. Very much like you, and that's partly the reason why I've slotted so nicely into you and your system, because your system and your approach is very similar to mine. So
exactly, mine is as simple as that as well. Day trend, looking for value, retraces, enter. The entry is the tricky part, and what time frame do you enter on, and what are you looking for that entry?
Well, I'm probably a slightly longer time frame than you, so I'd say that I'm sort of straddling the fence between day trader and swing trader. So my entry time frame would be the 4 hour. I do step down to the 1 hour just to get a more detailed view of the price action, but more so the 4 hour. And looking at that day chart, I would be looking to enter, like you say, on that pullback, and then I would be looking at my day chart then to see where do I think this price is likely to get to. Where's this move likely to end on the day chart? So if it was in an uptrend, it's obviously taking it to the last daily swing high and beyond sometimes.
Okay. All right. And just to go in a bit more into your money management and that kind of thing, Pete, and I'm sure you've paid more attention to that since focusing on trading full time, and it's one of the most important things for me. It really is. There's so many traders that don't understand the money management aspect. They're like, I'll just enter here, Tom. I'm like, okay, what's your risk? How much you're risking? Where's your stop loss? And they're like, they're not too sure. So, typically what are you looking to risk? And what are you looking for in terms of risk to reward? Have you got any other techniques you use in that field of money management?
So my risk per trade is 1%. It's no more than 1%, and that's 1% of my trading capital. So if that trade goes against me and I'm wrong and it hits my stop loss, the most I'm ever going to lose is 1% of my capital. And that is a rule that I never break.
Yeah. Okay.
Can't break that rule. And that 1% is obviously based on where my entry and my stop loss is. So if the price goes against me and hits my stop, then that's a 1% loss. But my reward always needs to be more than 1%. So it needs to be more than 1-to-1. Okay. So I would never risk more than I could potentially gain. So my reward would be at least 1-to-1, possibly. I think my average at the moment, judging, going back and doing all my post analysis of all of my trades, it's about 1.4-to-1. Okay. Is what my average reward is coming out as. Okay. So right. For every 1% I risk, I'm looking to gain 1.4% gain. Okay. If that makes sense.
Yeah. Well, if you trade better than have more than 50% wins, you are making money.
Yeah. Yeah. And my wins, they tend to be around 50%. So yeah, so fortunately at the moment, as things stand, I am making consistent gains. Yeah. And that's over the past, since I've been doing this full time for the past few months, I think that's about 3 months, so 14 weeks. It's working out about 1% a week. Okay. Which some weeks it's a lot less and some weeks it's a lot more, but the average across all of those weeks is about 1% a week, which I'm happy with, to start with. Long may that continue. If that carries on, then I'm happy with that, because that puts me as I'm consistently profitable. And over the year, looking at it from an annual basis, that's 50% a year. So that's good. That's great. That's better than investing.
Yeah, that's better than investing, and that's outperforming every hedge fund. So brilliant. Yeah. That'd be that's excellent results. Yeah, brilliant, Pete.
If I can keep that up, of course.
Yeah. Well, I always find what you're made of as a trader when you have a rough period. You have them weeks where you just cannot find a good trade, where you think you're getting into a very good setup, and you are, but just you have them weeks where everything goes against you. That really tells you what you're made of when it comes to trading, and sticking to your money management, sticking to your rules, and just keep trading your system, and your edge will play out over time. We're all going to have a bad week.
I think that's part of the experience, really, isn't it? And I think that's something that I've certainly learned over the past couple of months, is that you can have those rough weeks and you can have those succession of losing trades. And obviously, when you're new to this, what happens is you start to think, well, something's wrong with my strategy. I need to tweak something. I need to change something. Maybe I'm not cut out for doing this. And obviously, you start to, all these negative thoughts start to go through your mind. And then, of course, if you do start changing things, you might be actually changing it for the worse without unwittingly realizing that that's just losing trades are just part and parcel of the process. So what's really helped me is following you and obviously being able to have access to some of the signals that you've been given, and that helps me then to have some reassurance, because my strategy is very similar to yours. It helps me have reassurance that actually I just need to keep going. There's nothing wrong with what I'm doing. Yes, I've had 4 losers in a row, but I don't need to start thinking about changing my EMA settings or tweaking my Fibonacci or changing anything else. What I need to do is to just keep on going, on going, because the winners will come back, and obviously they, over time, hopefully will succeed those losers. So following somebody like you gives me that reassurance, that confidence. Good. Rather than just blindly trying to work on my own strategy independently by myself. And then I think you find that traders just keep going round and round in circles, because they think that there's something wrong with their strategy, but actually they're just in a drawdown, which is normal. And they can't move up and make it onto the next level then, because they keep changing things.
It's a brilliant point, and something I was guilty of back many years ago. If something, let's say I give a strategy a month, and if something wasn't right, I would just constantly tinker and tinker and tinker, and like you say, just chasing your own tail. because you never have enough results or a long enough period of trading that strategy to know if it does have an edge, because human nature is to get quick feedback on what you do. You want instant, gratification and instant wins. And if you don't get that, you're like, right, changing the strategy, let's tinker with this, tinker with that. And that is the worst thing you can do. Yeah, it's a brilliant point, Pete. I couldn't agree more. Yeah, it's so detrimental to you because you are just chasing your tail.
That's it. I think once you've got a strategy, and I think you've made a good point there in terms of the information, the sort of the history. I think you probably need, I don't know, maybe 100 trades in order to determine whether a strategy is going to work or not. Any less than that, and you just haven't really got enough data. But if you can do consistently 100 trades with a strategy, and it looks like it's going to work, maybe you've got a, if it's profitable, obviously great, or if you're getting more winners than losers, it's great. Then at least that strategy over a reasonably long term is potentially going to work. But 100 trades minimum, I think, before you could decide whether to bin a strategy off or not.
Yeah, definitely. Yeah. And, and on your current statistics, 50% at 1.4 risk to reward, again, you're profitable, so and consistently profitable. And that's what every trader strives for. So, yeah, brilliant.
Well, that's it. I mean, this week, for example, it isn't going particularly well. I'm actually down this week. But
I've chose a bad week, Pete, haven't I? Here.
Well, that's it. But I'm laughing about it because I've got the confidence to just keep going. So I've had down weeks before, and I'm still trying. I'm still learning. I'll be honest about that. But what I'm trying to do is to up that 1% average per week to 2%. That would be my ultimate goal.
Yeah.
So I'm trying to whittle out those losers and try and cut out some of the dead wood and work out where I'm going wrong. And one really, really important way of doing that is to keep a log and keep a journal.
Yeah.
And go back and review those trades and have another look.
Yeah.
What I tend to do is I've got a spreadsheet, but I also make some notes. Every time I have a losing trade, especially, and the losers are the ones that I'll really learn the most from.
Exactly.
I write some notes there to say, what went wrong? What am I thinking? Why do I think that one didn't work? And sometimes there's no reason. It was just a losing trade, and you always get losing trades. But other times I can look back at the trade and say, that I probably didn't pay enough attention to that previous weekly candle, or having had another look at it, it probably was a bit overvalued. Say, I got in too early and it retraced a bit further down. So quite often I can find reasons as to why I shouldn't have been trading that.
And again, just all more learning and just refining those entries. Basically, the strategy doesn't change. It's just a case of refining that entry and not entering, or not having all the information. Sometimes it is a weekly candle, a daily candle, even a H1 candle that you just haven't paid attention to, and it can cost you a bad trade.
It's so easily done. And I think that's it with trading. I feel like you're walking a tightrope.
Yes.
And any sort of wibble or wobble of the rope and you're down, and you've got your safety net, your stop loss, so it's not the end of the world. But it does feel a little bit like that one false move and it's a losing trade.
It's a very good analogy. I'm going to steal this, Pete, and use that analogy as my own. Okay.
Yeah, you're welcome. You can have that one.
All right. So it seems like it's been a successful transition so far, and the trading's hitting the right notes, and we're on a bit of a profitable trajectory. What, just to share with our viewers, what are some things that that they could learn from that perhaps you've experienced over the course of your trading? What any words of wisdom for our subscribers and viewers?
I would say, from a technical point of view, I would say multi-time frame analysis is absolutely key. It's taking that top-down approach I think it's so easy to just sort of jump in on your chosen time frame, whether that's the 5 minute or the 15 minute, the hourly or whatever, and only focus on what's happening on that particular time frame without paying any attention to the higher time frames. I think for me that is key. That's something that, you know, I really do try and pay attention to those higher time frames. And with me and my strategy being the 4 hour being my kind of execution time frame, I'm looking at obviously the daily, I'm looking at the weekly, I even take a look at the monthly, you know, just to see what the ultimately the bigger picture is. So multi-time frame analysis is a really big one. But I think from kind of a progress point of view, and something that I probably haven't done early enough, and if I had to go back and do all of this over again, I would say probably finding a trader such as yourself, a mentor or tutor, somebody that's got the experience, and just honing in on their expertise rather than just sitting there for days, weeks, months, even years with some traders trying to just nail it by yourself. I think if you follow the, you know, the advice and the experience of somebody else that is successful, I think your progress will just happen a lot quicker. You know, and I think that's where I went wrong when I first started. Obviously, I was doing the technical analysis with the investments, but then I was doing, you know, shorter term trading on a demo account and not really getting anywhere. And I think that can just carry on indefinitely. But I think once you sort of get on board with somebody that is experienced, I think then that not only gives you the confidence to carry on trading that system even through drawdowns, but I think you just pick up lots of really good strategies, good techniques, good techniques that you can take forward and implement into your own trading strategy. So finding somebody to coach you really is really
somebody
good.
who's been there, done it, and you can learn from their mistakes. Exactly. And but also, you know, as you know, you're part of the VIP Discord, and I put my trade ideas in my VIP Discord. But I don't want people to blindly, you know, follow those ideas. I want them to support them with their own strategy and their own analysis and what they think of, you know, my trades. They might totally disagree with one of my trade ideas, fine, you know, but as long as you have enough reasons to enter a trade, then, and it fits in with your strategy, then enter, you know. And definitely learn off others. You know, that's what I did, you know, many moons ago. You know, I just tried to pick as many brains as I could, and you know, develop something that fits you and your personality. So, for example, scalping the 5-minute chart does not suit my personality. You know, I found the H1 is about where I'm at with regards to the amount of setups, waiting for setups, and not only that, but, you know, it's full time for me. I can trade the H1 and give it enough attention. Whereas, you know, if you are working or you have other commitments, then look at the higher time frames, because you can't spend that screen time. You know, you can't manage those trades efficiently if you're at work or whatever. So yeah.
I think that's a good point, because I think the other thing is that I would say in terms of advice is don't try and jump into, you know, even a day trading or a scalping strategy to begin with. If you're new to trading, I would say look more to a swing trading strategy, because it's so much easier to trade the higher time frames than the lower ones. Because those shorter time, looking at a 5-minute time frame, it just, the price action moves so quickly. And then of course you need to look at your top down approach. You need to look at so many other time frames that it just blows your mind. So if you're new to it, then the higher the time frame, the better. Really, I think you'll find it a lot easier.
If you want grey hair, trade the 5-minute. Basically,
when I first went full time a few months ago, I first started with a scalping strategy. And it's the same strategy as what I do now, but just on a much quicker time frame. But it just didn't suit me at all.
No, exactly.
Yeah, it was just too stressful.
Mm.
And another thing that I did wrong again, which I wouldn't advise anybody else to do, is I set myself a daily target, and it was a daily target back then.
Mm.
I said to myself rather ambitiously, I want to make 1% per day.
Mm.
So of course, with my strategy, I'm risking 1%. If I started the day and I had a losing trade, I'm down 1% at that point in time. So
Yes.
now I need to get 2 winning trades in order to gain back my 1% loss,
Yeah.
and then get some profit on top. So, and that
Yeah.
puts you under enormous pressure then. So
It does.
you're sort of thinking, well, it might get to lunchtime and you think, oh, I'm still sitting on this losing trade. I need to get another setup. And then, of course, you're getting desperate and you're sort of entering a trade when you probably shouldn't be entering. And that ends up being another losing trade. And now you're 2% down. And,
Yes.
you're a long way off your 1% profit for the day, but by being 2% down on the day. So it all starts to get quite overwhelming. So
it does.
Don't trade the lower time frames, and don't set yourself daily targets.
No, and by setting yourself daily targets, you are trading your profit and loss. You are not trading the charts. Yeah. And if you say to the market, Mr. Market, I would like 1% today, he does not give a damn about your 1%. It's totally unrealistic and a waste of your time and energy, and puts you under unnecessary pressure.
It's stressful.
Exactly.
And it puts you in a bad mood. And then you get into trouble with the wife then.
That's it. Why are you so grumpy? I set myself a 1% limit today and I haven't hit it. And it's pointless. I must say, the only things you can control is how you enter a trade and how you manage your risk. And your strategy, your money management, and your psychology. They're the 3 things you can control, and they're the 3 things you should focus on. And then as a result of, mastering those 3 things, which takes a lifetime, we're all still mastering it, the profits will take care of themselves. And whether that ends up as 1% a day, 1% a week, 5% a month, it's irrelevant. It's becoming the best trader you can and getting into the best setups you can. That's your goal as a trader. And don't even think about the upside and what you can make, but manage that risk like your life depends on it,
What I've started to do is I wanted to disengage with the money completely. So what I actually do is I don't look at the whether a trade is in profit and how much it's in profit anymore. Because again, that can sway your emotions. And if you see that it's a nice tidy profit on there and you think, oh, I'll just grab that while I can, you're not allowing that trade to move on and hit its target. You're trading, like you say, you're trading your profit and loss instead of trading the chart. So I try not to look at the financial side of any of the positions that are open. I just look at the pips. That's all I look at now. So,
perfect.
And that doesn't really mean as much to me emotionally than if I can see that figure, that monetary figure sitting there, tantalizing me to close the trade. Or likewise, if it was the other way and it was a loss and it hasn't hit my stop loss, but it's still a nasty looking loss. Sometimes you can think, oh, I'll just close it now before it gets any worse. Just close that one down. And of course you feel a sense of relief because you're no longer sitting on that loss. But what happens? It bounces back up and it would have hit your target.
Exactly. I couldn't agree more. Do not trade your profit and loss. Trade the charts. What are the charts telling you? Some brilliant points, Pete. Thank you very much for sharing your trading journey.
You're welcome.
So thanks, Pete. I think, a lot of traders will find that really insightful because a lot of traders are, potentially in the same boat as yourself. They're maybe trading part-time or along with their job and they're trying to make that transition to a full-time trader. So lots of great information and, thanks for sharing.
No worries.
And also, you may not know this about Pete, but he is the Analysis Challenge current leader. Yeah, he is top of our leaderboard on the analysis challenge. And this week's analysis challenge was the New Zealand dollar against the Swiss franc. And those of you who don't know what the analysis challenge is, basically, I give you a currency pair at the start of the week. You need to analyze that pair and determine what Friday's closing price is. Okay, so if you would like to join us for the analysis challenge, guys, then why not subscribe to the channel, smash the notification button, and if everyone right now could give a big like to Pete, yeah, everyone smash that like button. Thank you very much, guys. Help support the channel. So then, Pete, the limelight is yours. You are going to give us your view of the New Zealand dollar Swiss franc for this week and where you see it ending up. And then also talk a little bit about your strategy and what you're using here.
Yeah, no worries. So New Zealand Swiss franc. So yeah, it's a tricky one this week, to be honest. There's some conflicting information which I'll talk through. So looking at the chart at the moment, this is the weekly chart. So you know we're in a downtrend on this weekly chart here. So we're seeing these lower lows and lower highs, but we've hit this level down here, which is giving us a double bottom or maybe even a higher low on the weekly chart. So we've obviously had this bounce up. So I would say on a weekly basis, I'll be looking to go short really, but given the fact that we've come down and done this double bottom here, we seem to have found some support. It's the short side isn't looking quite so attractive because it looks like that downtrend is potentially coming to an end. And then I would, we've bounced up here. And the other thing that I tend to use is a 12 EMA, which is this blue line here. So okay. I know you tend to use the 20 MA.
That's right.
But I tend to use the 12 EMA, and the red one is the 26 EMA. And as you can see there, we've bounced off it here, and it's providing some resistance here as well. And then we've just kind of given it a little touch here as well. So that's sort of telling me to, it's saying don't go long because probably we're going to find some sellers on this weekly chart, given the fact that we're in a downtrend, but also, the short side is potentially coming to a bit of an end because of this higher low or double bottom. Yeah. It's a tricky one. I'm happy to jump down and have a look at the day chart though, because it's a bit of a conflict on here because we've got this uptrend, daily uptrend. So it's sort of telling me to go long there. So the weekly's saying go short, the daily's saying go long. It's tricky. If I had to trade, I'd probably say that by the end of the week, I'd say this is probably going to find some buyers here. So we're going to start to creep up to around, this sort of level before we might start to hit some sellers because of that weekly downtrend.
Okay. I hope you're right, Pete, because I'm currently in a buy trade on New Zealand dollar Swiss franc up to that last daily high.
Yeah, well, that's it. I agree completely. I think my analysis challenge prediction was 5578. I think it's probably around about here on that chart, if you can see that. So yes. that's where I sort of
daily highs, basically.
Yeah, up to those daily highs, I think we might start to see some selling pressure there. It's tricky with the analysis challenge because obviously it's predicting where the price is going to be at the end of the week, whereas usually in my analysis, I would try and predict where the price is likely to reverse and turn back. So it's a tricky one. But that's my analysis really, is that we're in a weekly downtrend. So, there's quite a lot of selling pressure, but we're in a daily uptrend. So, there's a lot of daily buying pressure. So, I've gone with a safe option of around this sort of level.
Okay. All right. Good. So, you're normally correct, Pete. So, if the leaderboard is anything to go by. So, you heard it here first, guys. That is where price could end this week. And now, if you just sort of talk us through your strategy, really, Pete, and what you're looking for. And I see you've got some indicators down here, and potentially what indicators they are and how you use them.
Yeah, so I've just got simply a RSI and a MACD. So I use the RSI to help me determine when the price is overbought or oversold. So here, for example, we've seen a lot of selling pressure coming down here. So you'd be thinking, oh, I'll just look for shorts, but obviously on the RSI here, we're quite oversold.
Yeah.
So that would basically help me to stop getting into those short positions.
Okay.
So that's why I have my RSI on there.
And you're using the 30 and 70 level?
Yes, yeah, it's just the standard setup.
Yeah.
Nothing special. But yeah, that's my logic really with the RSI, just to help me really determine whether the price is oversold.
Yeah, makes sense.
Overbought. And then the MACD, I've actually turned off the signal line, so I've actually just got the histogram on there, and that really just helps me again, just kind of work out the ebbs and flows of the price action, because sometimes it's not particularly clear. But what I find with the MACD is it helps to just smooth out that price action. So okay. I must admit, I don't tend to use the MACD that much. It's probably just there. I mean, it's probably not particularly very useful for this chart at the moment, but it just sort of helps me determine which way the price is going. So yeah, okay. We've obviously seen this coming up here, and we've got this sort of ebb and flow here. So if the price action is quite choppy, this helps me sort of work out where the overall direction of price could potentially go.
Okay. All right, cool. And then you spoke about entries on the H4. So the last indicator, that's just volume. Yeah, we're just seeing volume there. Yeah.
Volume, yeah, which, to be honest, for Forex, certainly with intraday trading, you drop down to the lower time frames. I find that volume isn't particularly useful, because as soon as the US opens, you get a huge spike in volume anyway. Yeah. So it isn't that useful. But obviously, the more volume, the more the more confident I can be about a particular piece of price action, essentially. Sure. But I would only really use that on the day, the weekly. Okay. We've obviously seen a big volume spike here. So that, is that indicating to me that sellers are coming in and entering the market there and driving the price down? Maybe, possibly. Yeah. It's just another thing that I might keep an eye on, just to give me some confidence that a move, is likely to head in that direction.
Okay. All right. And okay, cool. Thanks for explaining that, Pete. Yeah, I know a lot of our viewers use indicators and use them as a piece of confluence, and that's basically what you're doing, in using them to potentially to exit a trade, maybe to enter a trade, or even keep you out of trouble. And I know everyone thinks I'm against indicators. I'm not. If long as you understand price action, if you use an indicator to support your idea, then it's another piece of confluence. That can work nicely.
Yeah, I agree. And I think you've just got to be careful that you don't have too many indicators, because what you can find is that they're all giving you conflicting information, and then you just get analysis paralysis, where you just don't know what to do because everything's telling you a different story. So
yes.
Yeah, I think it's probably best to try and use as less is more, really, in terms of the indicators.
Yeah, I couldn't agree more. Yeah, you can have indicators that will talk you out of a good trade.
Yeah.
And then you said you entered on the H4. So have you got any? It doesn't necessarily have to be the New Zealand dollar, Swiss franc. Is there anything you're looking at currently in terms of a trade idea on any pair, really? It can be this pair or any pair you like.
On this, I mean, we can have a look at this pair, but what I would say is that, I would use the daily chart to begin with. So that's king for me, really. I'd sort of jump back and have a quick look at the weekly to give me an a larger view, an oversight of the price action.
Yeah.
Daily is king. And then, as I say, we've got this nice uptrend here. So like you say, there's potentially an entry here. So then what I would do is drop down to the H4 then to try and determine where I can enter that position.
Okay.
So I mean,
are you just looking for a bullish candle at that level? Are you looking for a break in structure? Are you looking for RSI to be at a certain level? What's the key to your entry?
I'd say the key really is a break in structure. So where you tend to talk a lot about the H1, I would tend to use exactly the same analysis, but on the H4. So, at the moment here, we're seeing these lower highs here. So hopefully, that would be a lower high. I'd be looking for that long, as you say, because the daily is bullish. So, I'd be hoping really to see some of these candles sort of making their way up here, breaking this high here to give me some indication that the 4-hour trend is changing. We're coming into an uptrend. Okay. And then I would probably try and enter the position on a retrace down here and take the price up like this.
Okay. And where are you looking to put your stop? Where would your target be? What are you looking for there?
So my stop would always be below the previous swing low on the H4. So at the moment, that's sort of looking like the safest place to put a stop. But potentially, we could say there's a swing low here as well. Okay. I actually have these numbers. I don't know whether you can see those, but that's another indicator, which it's called pivots HL. So that actually just puts the numbers on there. And I set it to 3 and 3, and that actually just helps me to determine where the highs and the lows are on the chart. Okay. So if it's got a number, like we can see that this one here has a number on it, then I know that that's a pretty solid swing low, because we've got 3 candles either side that haven't gone as low as that one.
All right, so, interesting.
So that it just helps to give me the solid highs and lows, because sometimes they're not particularly clear. Like we can see, this candle's given us a swing high, but it hasn't got a number. Yeah. So that probably isn't such a solid high as this one in order to put my stop.
Sure. So I think that could be a really useful indicator for some of our subscribers. So interesting. Yeah, because sometimes some people ask me, do we know if that's the swing high, that's the swing low, and what determines that? This will take some of that headache away.
Absolutely, that's exactly what I use it for. It's just really when the trend isn't particularly clear where the swing highs and swing lows are, because the system automatically gives me the number. It's really quick and easy for me to just scan the chart and see where those points are.
Sure.
So going back to what you asked me, I'll probably initially put my stop under there, and then I would probably be looking to take price back up to some of these highs up here, back up to here really. So if price did come up here and I look for the retrace, that would be my entry here. Yeah. Obviously, that's my stop, and then my profits up here. So that's giving me just over a 1-to-1, roughly, by looking at it from the eye.
Okay, all right, Pete. I mean, very interesting, and I like your strategy. I mean, it's very similar to what I do. I'm looking for structure breaks. I'm with the day trend. I'm looking for structure breaks on the lower time frame to confirm that, buyers or sellers have come back into that market. So, all seems pretty clear and, straightforward stuff. But, the simple stuff is the most effective stuff, I must say. Yeah, that, we're interested in structure, support and resistance, and candlesticks. Yeah. Yeah. Do you pay a lot of attention to candlesticks and what they're telling you, or more just breaking levels?
I do. Yeah, definitely. I pay attention to the candlesticks. Absolutely. So if we had, a candlestick, a nice big solid green candlestick that was coming up here, then obviously that's then going to give me the confidence to start entering that trade. So I mean, right now that red isn't. Yeah, I'm not in this trade, but that isn't giving me a huge amount of confidence. So I really need this level to break here to give me the confidence to get in. So I know you said that you're already in this one, but that's probably because you're looking at a 1 hour time frame. Whereas for me, it still needs to do a bit of work really before I would be happy to get in on that trade on the 4 hour. But the candlesticks for sure. Wicks. Totally. If there's a big wick,
like
that means a lot. This one obviously here, that's a great candle there with that lower wick.
Yeah, definitely. And that's the trade-off with the time frame you trade. If you trade the 15-minute, you're going to get a lot of structure breaks and a lot of setups, but they might not be as reliable. Then if you move up to the H1, you're going to get less setups, but the structure breaks are going to be a little bit more reliable. And then we move to H4 again. If we break that high that you explained on your chart, then we're pretty sure we're going to get price move back to those highs. Yeah, I agree. There's that trade-off between the amount of setups and the time frame compared with the reliability of the setup,
Yeah, I think the higher the time frame, the more confidence you can have in that particular move. So and it falls down to lifestyle as well. So the higher the time frame, the less time you have to spend in front of the charts. Or if you've set an alarm, for example, if you're busy, you have to quickly jump in front of that machine and take a look at that price action once the alarm goes off. Whereas on a higher time frame, I know that I've really got until the end of that 4 hour candle before I really need to start panicking about getting in on the trade. So, this candle here on a 4 hour chart, that's not going to finish today until 6 p.m. So, I've got a few hours really before I need to start thinking about, if this was to move up here, let's say, I've got until 6 p.m. before I need to start thinking about entering that trade.
Yeah, sure. Yeah. All right, then, Pete. Well, thanks for sharing a little bit of insight into your strategy. You heard it here. What Pete's prediction was for the analysis challenges is always correct. And thanks once again, Pete. And for all you subscribers, viewers, guys, if you've enjoyed Pete's interview, then why not come and subscribe to the channel? Subscribe to the channel, guys, and smash that notification button. And if I could ask everyone right now to smash the like button, if you've enjoyed this content, this interview, I have enjoyed it. I hope you have too, Pete. Please smash that like button. Pete, I'll see you in the VIP Discord room soon. Happy trading, mate. Thanks for sharing everything today.
Appreciate it, Tom. Appreciate all your help. Great work. Keep it up. It's a great channel and great content. So brilliant. Thumbs up for me.
Thanks, Pete. I'll pay you later. And thanks, Pete. See you soon. Cheers, guys. See you on the next vid.